Welcome back. You're watching Stock Picks, and today we unpack Afrimat, a Premier Group, and Roynet. All this and now with Anthony Clark from Small Talk at Daily Research. Anthony, thank you so much for your time today, and a Happy New Year to you.
And a very Happy New Year to you, and hello from Romans Bay. I'm here with a dog who's running around, but the last time I did this interview with you, I think I was in Korenberg. This time I'm in Romans Bay, so this analyst does get around.
Thoroughly enjoyed that about you, Anthony. Also keen to maybe look at 2023 as we try to cast our net ahead. 2023 was a difficult year, I think, for equities. Let's talk about, how you observed this period and the performance, I think, of markets over that period.
Yeah, 2023 was a bit of a mixed year. As I mentioned to 20 of your colleagues overnight, you made most of your money in the small to mid-cap market in the last 2 months of 2023. The market actually turned on the 26th of October and then on the 30th of October for the mid-cap index. And there were gains of between 11 and 14% for most of the major indices in the final 2 months of the year. So you could have easily put your money in the bank for the first 10 months, pulled it out, and in the last 2 months of the year made a good 10%. So basically, it was a fairly mundane sort of year. There were highlights here and there, the usual bout of delistings, corporate activity, profit warnings, and some earnings surprises. But on the whole, the small cap market for last year, as of year to date, as on a 1 year basis, was up 2.57%, and the mid cap market was down 3%, versus the Aussie, which is down just under 7%. So for the third consecutive year, despite coming off its very best, which was 2020, when the indices in the small to mid-cap space virtually were up 50%, the small cap market has once again, for the third consecutive year, incrementally been the best place to be in the JSE, albeit liquidity has dried up. So 2023 was a mixed bag, but you made all your money in the last 2 months of the year.
Well, looking ahead, 2024 promises to be an interesting one, I might say. Let's talk about it. How are we taking stock of this environment we're anticipating here? Elections, geopolitics, maybe interest rate cuts. There's a lot to take stock of at this point.
Yeah, if I was a combination economist, political scientist, and a theologian, I think I'd have a fantastic year. We have got probably one of the most dynamic periods in recent history ahead in the stock market, not just locally, but globally. I was reading in The Economist magazine last week that in the next 12 months, 3 billion people globally in democracies will be going to the polls, from America, Bangladesh, Indonesia, amongst others, yet alone our country, which should happen in April and May. And we all know that political instability is one of the things that stock markets dislike more than war. And currently we have geopolitics going on in Taiwan and Taiwan, with the incumbent anti-Chinese president in Taiwan being re-elected. We have the ongoing war in Russia and the Ukraine, and we have growing conflict in the Middle East, which is not just impacting regional politics, but also now global shipping, with the Houthis causing trouble in the Red Sea. All of this is leading to global uncertainty, which is why year to date, the Aussie is down 4.2%, the small cap index down 1%, and the mid cap index down 3.4%. And the reason I mention these numbers is in times of political uncertainty, people tend to create liquidity. And the reason why the small cap market, when it does well because there's a limited pool of capital chasing those stocks, and any capital coming in, the prices start to run very aggressively. But when times are quite tough and people look to raise money, you can't really sell these small caps. So they tend to sell the larger quality mid caps and the blue chip companies. And I think that's what's happened at the start of this year. We are going into a period in this country particularly where we have no idea who's going to be in charge of this economy come the middle of this year. We've already had the finance minister coming out overnight, reported on Bloomberg's, potentially priming the country for major tax hikes coming. We have a fiscal precipice potentially hanging over us regarding the mismanagement of this economy of the last couple of years. And all of this has to be countered with what is going to be one of the most contentious elections globally, which is the potentially Biden-Trump administration in November in the United States. You may have seen that Trump won the Iowa election overnight, the caucus there, which does not bode well for the free world in terms of the economy. All of this adds to global uncertainty. Global uncertainty adds to worrying stock markets.
I mean, what does that then lead traders to do? Of course, trades still need to be made, Anthony. Decisions still need to be made. Money needs to be put somewhere. And I'm wondering what that means for equities as a whole. But even if that might mean that this then turns it into kind of a stock pickers market, where people have to do added research and be very certain about where they put their money because of this increased uncertainty and risk.
Absolutely. Funds still need to be invested. Pension fund money still comes in. We all have to save for our long-term futures. And in times like this, it's often seen as a flight to quality. Granted, we are an unusual case in this country where we have our own localized politics and the currency. So we have to be a little bit more pragmatic in our view, which is why my three stock selections regarding quality are all stocks that are very well known to your viewers, which are Afrimat, Premier Group, and Reunert. All are material, well-known, large quality mid-caps, ranging in market value from 7 to 11 billion rand. They've got great track records. They're all in products which will be in local and international demand. And they should produce earnings of the next 12 months, which should be reasonably immune to the slings and arrows of domestic politics, because in Afrimat's case, the iron ore they produce goes into China, which is rebuilding its economy from economic distress by pumping money into construction and infrastructure. In Premier Milling, everybody has to eat. They're the largest producer of bread and wheat-based products in the country, and that'll always be in demand no matter what the ruling politics. And in Reunert's case, they're involved in infrastructure, defense, and renewable energy. And as we all know in this economy, with Eskom looking to invest in a transmission network to bring all the new solar power and the RPPs online, and the fact that everyone's looking for alternative power supplies, that should do quite well. And as I said again to your researcher overnight, nothing makes more money in the world than war. And Reunert has a very strong defense business in communication, and global uncertainty and war, again, is aiding that business. So in Afrimat, Premier, and Reunert, you've got three very strong defensive quality companies which have an enviable track record and should all do reasonably well in times of political and economic uncertainty.
And then I must ask you, if we think of the counters that you've given us today and their defensive nature, is it possible that we will have less eggs to put, less baskets to put our eggs now, just, on the back of it? Companies, the ones you've mentioned, great track record, great management. I think of Afrimat, for instance, they've got that verge deal coming online as well. And so these are the kinds of stocks that investors would have to look at, and if not something like this, rather not invest.
Yeah, that's actually a great question. I think of the 300 stocks listed on the JSE, if you take out all the small and liquid stocks, many stocks that are, what I would call speculative, and the rand hedge counters, which would normally be the ones that most people would go for, the pool of available stocks in the universe that I track, particularly for this year, is going to be very, very concentrated. In the old days, you could literally have a slew of companies where you could be guaranteed fairly good earnings growth and a degree of certain share price performance. But as I mentioned, in a period of global uncertainty, and particularly domestic uncertainty regarding, regarding fiscal uncertainty, political uncertainty, and economic uncertainty, we have to invest for the longer term. And I think the availability of stocks which have a track record and a pedigree that would enable fund managers to sleep at night is actually very, very small. And the three that I mentioned would be probably one of the top three in anybody's basket for what I would call being able to sleep at night and being able to invest for the longer term.
It is a risk-off sentiment, and we can conclude that at this point, right? That it is risk-off here, and it is also best, especially for, I think, of new investors, people who might be entering the markets or even looking at small caps for the first time. You mentioned that, staying away from more speculative stocks at this point. I think just a prudent journey in 2024. Could that just be a recurring theme for the whole year?
Yeah, I think for 2024, I've been involved in the small cap market now for probably the best part of nearly 40 years. And I've written many, many cycles. And, I cover probably 70 stocks. And you have to be a dedicated analyst to actually understand the nuances and as to what is going on in the general small to mid cap market. Because as I mentioned to you before, the information to the wider world isn't commonly available. You have to kick the tires to understand what is going on. So for the man in the street and the average retail investor, I would not recommend right now going into the general small cap market, purely because you have to be far more adept at the information available to you to actually make a judgment call as to do you want to be in these stocks. For an analyst like myself, I would happily go into a basket of small caps because I understand the risks and I'm well aware of what's going on. But unless you actually have that fundamental knowledge, it is best to either keep your money in a money market account or to go into some form of tracking fund. But as I mentioned to you, for the overall theme of 2024, I think it'll be more about capital preservation. And if you could tell me who's going to win the election in the middle of this year domestically, the ANC or a coalition, or will it just be a free-for-all bun fight? I will then tell you where the rand is going to go. And depending on the political outcome later this year and the outcome of a rand, yet alone interest rate movements and potential tax increases, I can then tell you which areas of the stock market to go into. Right now, we are in no man's land. Nobody can predict what's going to happen in the next few months. And because of that, people will keep their money in their wallets and I think stand on the sidelines.
What we are expecting also is that election to happen by halfway through the year, but also interest rate cuts. We're speaking about the third quarter and beyond. Is it possible that the first quarter might look different? I mean, the first half of the year, Anthony, might look different to the second half?
Again, that is absolutely true and a great question. It all depends on the outcome of the election. At the end of the day, if a ruling party gets in, better the devil you know than the devil you don't. But if a coalition comes in with perhaps minor splinter parties, which leads to far more radical policies, which could perhaps upset the underlying economic fragility of this economy, interest rate cuts, which are expected, which will aid the consumers' pockets, particularly those with bonds, car repayments, credit cards, etc., will offset a lot of the pain that people have suffered in the last few years from increased payments on a number of products and services. But saying that, again, depending on the political outcome, nothing kills spending more than political uncertainty. And there has been talk of a VAT increase. Now, one of the few things that this government can do to raise money quickly is to increase value-added taxation. It is incredibly unpopular. It tends to hit the poorest of the poor much harder than those at the top. The trouble is this country is in a bind and we need money. And if VAT does indeed increase, that could actually kill the spending that this economy needs to kickstart it. So again, I will tell you, it all depends on who wins the election and the political ramifications of the policies that they enact post the election. Until then, even my crystal ball can't give you an opinion. I don't think anybody can.
Yeah, absolutely. And of course, Anthony, what we're also faced with here is also all these elections around the world, right? And even now, some of our trading partners are going into an election. You mentioned the issue of Donald Trump, and I'm keen to find out how what happens in the US may also affect us here at home. We've seen it throughout 2023 that we are so closely affected by the United States and their own market there. I'm keen to get your thoughts on how you're taking stock of what's happening in that part of the world and how it feeds into our own equity story here, and maybe looking at small caps and medium caps in particular.
Well, again, I will caveat that I'm certainly no political economist or underlying economist. So, we all know what's been going on in this country in the last 12 months, where the political affiliations of a ruling party towards what I would call despot countries from Iran, Venezuela, Cuba, Russia, amongst others, has not engendered ourselves with our Western trading partners, where capital investment in this country has been dwindling, and the net outflow of investment with international investors selling out of a JSE has continued to escalate. And the more that this country aligns itself with what I would call ideologically suspect nations, why would you want to invest in this country as an international corporation or international, investor? I wrote before Christmas that there was a major deal about to happen in the JSE late last year regarding a significantly large takeout of a company on the JSE, which I will not name because the deal never happened. That deal was pulled at the last second because the US-backed financiers did not want to commit capital in this country because of the ideological political affiliations of its government and the way that this country was going. And I think we must be very careful into which bed that we lie in this country. We have a nation of 60 million people, of which half are dependent on social grants. We have very low economic growth. We have zero employment growth, and we have millions of youths in this country with very little hope. We need to create the right environment in this country for growth, for prosperity, and the upliftment of all. And if aligning ourselves with despots, tyrants, and ideological warmongers is not going to be the way to uplift the majority of this country. So I would hope at some point sense will prevail and economic prosperity will start to come back to this country, which is what business has been crying out for years.
And then just looking at, these stocks, Anthony, that we've spoken about here, Afrimat, Premier Milling, as well as Reunert. For me, Premier Milling is possibly, it's the newest kid on the block. It's an old kid that came back to the block. So it's the newest kid on the block here. I'm just keen to get your thoughts on this one. You have mentioned that, of course, bread will always be in demand here. But I'm just wondering about its prospects in South Africa at this point, just considering how recent it relisted.
Again, a great question. You are correct. Premier Milling was due to list December last year, and the listing was, December 2022, and that listing was pulled because of uncertain market conditions. It relisted in March 2023, and it's vacillated between 52 Rand and 62 Rand. It's possibly one of the best run food companies on the JSE. Market value circa 7.2 billion Rand, with the significant majority of its revenue and profitability coming from making bread. And it makes bread very efficiently and very profitably. Everybody has to eat. And the key input in making bread is wheat. And the wheat price internationally has fallen quite sharply in the last few months. One, because of increased wheat production globally. And secondly, domestically, we have had 2 or 3 very, very good crops of wheat, particularly here in the Western Cape, which grows most of the wheat in the country. So if your single biggest input cost is wheat, which has come down, your second biggest input cost is fuel involved in heating the ovens, which has also materially fallen. Let's not forget that diesel was trading at around 26 Rand a litre. Only a few months ago, it's now trading at around 21 Rand. Those are 2 significant input costs that have fallen by between 15 and 20% in the last few months. And the bread market is very, very competitive. It is very difficult to push on pricing. You can actually make pricing by, 1, reducing your input costs, by becoming more efficient, which Premier Milling has done, and if your input costs become cheaper, which is fuel and wheat. So I anticipate that Premier Milling, which had a very, very good year last year, I think earnings from memory were up just under 30%, should have another very good year this year because the key drivers to this company's profitability have all come down. And as I said, everybody has to eat, and bread is the most basic of food sources.
Well, that's all we have time for today, Anthony. Thank you so much for joining us today. A great way to start off the year. I think a very comprehensive picture for us. Thank you. It's been very valuable. And that was Anthony Clark from Small Talk Daily Research with your Tuesday edition of Stock Picks.